Hi, everyone. This is Natalie Pace. Today is April 5th, 2022, and we're doing a special video conference on hot countries. So we'll get started in just a moment.
Hi, everyone. So let's get started. I'm going to start with the PowerPoint presentation, but basically there are a few countries, many of which we've been featuring in our investor educational retreats, that are looking really strong in 2022. And a lot of that has to do with commodities. So let's jump in. So nickel prices soared when Russia invaded Ukraine. And here's what this looks like. So as you can see, they spiked so much in February that actually the LME, the London Metal Exchange, has had many disruption events where they stopped trading on nickel because it was going so high. So this has a lot to do with the fact that nickel is used in so many things. It's used in EV batteries, it's used in wind turbines, it's used in stainless steel, and Russia is one of the top producers, but not the only one. Now we'll come back to this chart, but let's go here again. So EV batteries in the new iteration are using about 3 times as much nickel as they used in the last generation. And again, wind turbines are a big push because of the world's focus on clean energy. The nickel's also used in stainless steel and of course in nickels. Now, this is important to realize is that sales of electric cars hit 6.6 million in 2021, and that takes it to 9% of the global market share, up from 2.5% in 2019. And that means it's more than tripled since in just 2 years. And it's on a very fast track trajectory, with China being one of the biggest consumers of electric vehicles. That's why and I do encourage you to read this blog. In my blog on that, I indicate that the Chinese EV market has already hit 20%. Now, the highest EV market in the world is Norway, but the biggest is China. Okay, so as you can see here, Indonesia is the biggest producer of nickel, followed by the Philippines and then Russia. Now, with Russian boycotts in place, that means that all the other countries, especially Indonesia, are going to benefit from that, especially of higher prices. Now, one thing I wanted to share with you is that Indonesia is already predicted before the spike of nickel. It was already predicted to be one of the top growing countries in the world in this year. So here we've got Indonesia here at 5.9%, which is one of the top growing countries in the world. So this is a good idea if you are interested in, maybe having something hot in your portfolio, or maybe diversifying into other countries. Now, the other thing I wanted to point out is that copper prices have been at an all-time high for the past year. Copper is the new oil. This is according to Goldman Sachs. Demand includes clean energy and electric vehicles. So again, both of these commodities are benefiting from a push towards cleaner energy and all of the popularity of electric vehicles. So here are the top producers of copper last year. And as you can see, Chile is by far the #1 producer, with Peru in second place, followed by China. The US is a strong producer, Australia, and again, Russia is in there too, but the boycotts are going to benefit it less. So this can kind of help you a little bit when you're thinking about diversifying into other countries. Now, as you can see here, we look at Chile and Peru, they look pretty strong too. Now, this GDP that's done by the IMF will likely be updated very soon. because it hasn't included the Russian invasion, the other things that we're going to talk about in just a moment, the yield curve inversion. There's all kinds of things that are putting greater risk of recession on the map. In fact, the US GDP has now been revised to under 3% for 2022. And as you can see, before the revisions, it was at 5%. So diversifying into clean energy, Indonesia, Chile, Peru, this seems like a no-brainer, right? Because we've got a push towards clean energy, we've got a push towards electric vehicles, we've got a disruption in the supply of these raw materials that are definitely needed. But there is one but here that we have to consider. Everything crashed in the Great Recession, even things that were as hot as they were today. So here's what clean energy did during the Great Recession. As you can see, it was up pretty high, almost as high as it is today, or actually almost as high as it went in January of this year, before it dropped off a little bit. And then it crashed by more than half. Went down probably about 65, 70% in the Great Recession. Now, why did that happen? Well, clean energy was the top performer in 2007. People don't realize that. It was about 65% gains in 2007. It was just as hot then. Everybody was pushing towards a clean energy future. And then we had a global financial crisis, and all of the countries had to cancel all of their big projects. And so that's why clean energy tumbled. And as you can see from this chart, it took a decade before the prices came back to even. So it's really important for you not to just go all in because you think something is super hot. Now, Chile, and the reason that I put a different price point here is that Chile did as well. So it went down in the Great Recession, and then it soared. So you can see that its high was 80 and right now it's at 30. So this could be one that is a good buy, especially given the price of copper and the fact that it doesn't look like copper prices are going to have any reason to go down, because keeping up with the demand of clean energy and electric vehicles is something that producers are going to have to do. And there's just not enough at this point. So here's the Buffett Indicator. And what this does is it tells you about US equities, not the rest of the world, but the US. And the long and the short of it is that US equities are still overpriced, very elevated. And as you can see again in this chart, when equities get over elevated, they tend to have swift and severe corrections. So we're more elevated today than it was before the Great Recession, before the dot-com recession. And in the Great Recession, the Dow Jones Industrial Average lost 55%, and people had to use the next 5.5, 6 years crawling back to even. And in the NASDAQ, in the dot-com recession, lost 78%, and that took 15 years to crawl back to even. So going all in because you think it's super hot, not a good idea, especially when there are at least 6 worrisome indicators of potential recession. So I do encourage you to read this blog, The Risk of Recession in 6 Charts. Again, just go to nataliepace.com/blog, and you should be able to access it. Or you should also read my China EV market blog as well. Okay, so what do you do instead of going all in? Consider having a hot slice. Now, this is a 30-year-old. So essentially, when you're thinking of your nest egg pie chart, when you're thinking of your retirement account or your managed brokerage account or your own brokerage account, you always want to keep a percent equal to your age safe. If we think that there are 6 risks of very, very, very important risks of a recession, then we might want to overweight safe. That means that that money should not go down in value. So you'd have your slice that's at risk, taking on higher risk for higher gain, would be a smaller portion. So if we're looking at this 30-year-old, this person is overweighting 20% safe because of the 6 warning flags of a recession, and then diversifying. And they're including a hot slice of clean energy. They might include safe haven, a hot slice of gold, silver, or crypto. They might include a hot slice of Chile and Peru, or a hot slice of Indonesia. And you could also think about using one of these 3 countries, or all 3 of these countries, as a small or a mid-cap replacement. So again, proper diversification is key, as is regular rebalancing, which we'll talk about in just a moment. But what is proper diversification? Again, start with keeping a percent equal to your age safe, overweight safe if you think we're at risk of a recession, and then diversify the remaining at-risk portion into 10 funds, small, medium, large, value and growth, and 4 hot slices. You want 10, you don't need 12, you don't need 50 or 18 pages. In fact, most people with 18 pages are not well diversified. They have large caps over and over and over and over and over again. And depending on whether their particular manager likes the Dow or the NASDAQ, they will either be more concentrated in value or growth. So what do? You need to know what you own, absolutely. And whether you want to do it yourself or get a second opinion from me, now is the time to do it. You don't want to wait for the bottom of the market and then have to hope and pray that you recover from losses. You want to protect yourself before the losses occur. So when the bottom comes, you have the liquidity, you have the money to be able to buy low and capitalize on the emerging bull. So rebalance regularly with a properly diversified portfolio earned gains in the Great Recession and the dot-com recession, and outperform the bull markets in between. So if you didn't do that and you were instead buy and hope, in the dot-com recession, you could have lost 78% of your NASDAQ and waited 15 years to crawl back to even. In the Great Recession, you would have lost 55% on the Dow side and waited about 5.5 to 6 years. So using a bull market to crawl back to even, riding a Wall Street roller coaster, that plan is nauseating and it's not an efficacious plan. Like hoping to make up losses in a bull market is not a great financial plan. So know exactly what you own and why now. Don't have blind faith that someone else is protecting you. Rebalance regularly, get properly diversified, and consider leaning into some of the countries that are going to benefit from where the world is heading, which is a clean energy future, more electric vehicles, and of course, the commodities that are associated with that, particularly nickel and copper at this point. But be aware that especially in the US, that equities are very pricey. That doesn't mean that's the case everywhere. So if we look at that Chile portfolio, you can see here that the current price is $30 and the high was 80. So this might be a decent buy at this point. And again, you want to make sure that you are considering the price whenever you're investing in something new. So if you have a slice and you think it's a great price, fill it up. Like if you're supposed to have 10,000 in each of your slices and you want a hot slice of chili and you think it's a great price, go ahead and spend it. If you think that Peru is not as good of a price, it doesn't have to be all or nothing. Like you could think of it, do I want to fill up half the slice, a third of the slice, 75% of the slice, whatever it is that you want to do. But it is absolutely sure that these countries that we just discussed are countries that could potentially benefit from this commodity crunch, partly due to an increase in usage of nickel and copper in electric vehicles and clean energy, and partly due to the supply crunch, some of which is being created by Russian boycotts. So again, you can email info@nataliepace.com. We have free web apps where you can personalize your own pie chart. We also offer a free rebalancing blog and video conferences, educational retreats. And of course, you can get an unbiased second opinion from me directly. Call or email for pricing and information. And again, here's our homepage. I also wanted to say, if you are interested in clean energy, then be sure to read The Power of 8 Billion. It's Up to Us. All you have to do is click on the book cover. It'll take you over. As you can see, we priced the ebook as low as Amazon would let us price it. It's in pre-launch mode now, so please give us a review. And there again is the book. And if you are interested in joining us at our June retreat, please register now, because if you do, then you're going to get the best price. So you can go to nataliepace.com and just scroll down. You'll see the retreat flyer right there. Click on that. And you'll find all the reasons why you want to join us, including testimonials, what you're going to learn. And again, April 30th is the early bird pricing deadline. And in fact, if you want to bring a friend or a family member, you're going to get a great price to bring them with you, because we do encourage family financial literacy and definitely partner financial literacy. You want to be on the same page, speaking the same language with your sacred beloved. All right, so that is it. Hot countries based on hot commodities that you might consider adding as hot slices to your portfolio. Thanks again. Join me at nataliepace.com. Email us at info@nataliepace.com. You can call us at 310-430-2397. And you can also join us on social media. So again, if you're at nataliepace.com, you can see all of the ways to join us on social. Click on any of them, and you'll even be able to watch this video conference back on our YouTube channel right there in about an hour. Thank you again for joining me, and I will see you on Thursday for another one. We're going to be talking about 6 CO2 facts that might startle you, and I'll see you then. Thanks for joining.